friends, welcome to Random Gleanings. He is Jesse, I am Chris. Thanks for being here. So Jesse, it seems like, we're getting near the end of 2024. It makes sense to start thinking about 2025. Had a good year for markets this year, good year last year also. And so you start to wonder, does it run out of steam? Does everything keep going? Certainly we don't see anything negative, but thought it might make sense to look at 4 or 5 things that ultimately could give you some indication of whether the market's running out of any steam.
Yeah. That, and just kind of something to look out for is maybe a theme from what we've been reading in 2025. So kind of 5 things to watch over the next year is kind of what we're thinking.
So let's start with the Shoeshine Boy.
Yeah, the legend of the Shoeshine Boy, Joe Kennedy Sr., JFK's dad, is at least mythologically, maybe realistically credited for the Shoeshine Boy indicator, where he was being told what stocks to pick while he was getting his shoes shined in 1929, and therefore decided to sell his stocks.
So he got all his stocks sold in 1929, and just because he thought there would be some crash when the Shoeshine Boy was giving him stock picks, and he was correct.
Yeah, and there's some indications that maybe the Shoeshine Boy indicator is flashing a little bit. I would ask you if Uncle Bill or Uncle Ted at the Thanksgiving table was, blathering on about which stocks you should pick or whatever. I had a low crowd this year, so I didn't have that experience.
Anecdotally, I didn't hear a lot of that,
yeah.
but it wouldn't surprise me if people were talking about it more. So, you could say that one's maybe a little bit yellow, not red, right? Okay, so the second one is the pace of U.S. initial public offerings, meaning new companies, IPOs coming public, right?
Yep.
And looking backwards, looking at the late 90s into 2000s, there was a big jump at that point in 1999, and then the market peaked in March of 2000. And then looking at 2018, 2019, same sort of deal. Things were rocking along. And then all of a sudden in 2020 and 2021, there was just this exponential boost of companies going public all of a sudden. And then 22, the market was down 18%. So what's it look like currently?
Well, it's been very low the last couple of years. And this is measured both by the numbers of IPOs that we've shown in that slide, or you can measure it kind of by the volume in dollars of what the IPOs have drawn. And in both cases, things have been at the low levels in the last couple of years. So, there is some prediction that 2025 will be a bigger IPO year, but whether it gets actually to a level of explosive or something like that would be concerning is to be seen, yet to be determined. So, we'll see.
Okay.
We'll see.
All right. So the third one is outsized gains for U.S. tech stocks.
Yeah. It's been said, the double is a bubble, right? And so this happened one time in February of 99 that the NASDAQ 100 doubled
was up 100%
in 12 months, right? And obviously the ensuing period of time was not very good.
So just fun fact, here's the last 1 year for the NASDAQ, a chart on the screen right now, up 35.6% through yesterday. Do you want to take a stab at how much the NASDAQ composite was up between September 30th of 1998 and December 31st of 1999, so 15 months.
15 months, okay. Well, it included a 100% run in that period of time. So I don't know this answer. I'm going to guess 120.
140.2% is the answer.
Smoking.
Yeah, just absolutely smoking.
Yeah.
So up 35, up 35 is nothing to sneeze at. And to be fair, here's a chart of 15 months, up 46.7%. So still a long way.
Yeah, I think what Nick Colas of DataTrek is trying to show here on this chart, or on that original chart, is 2 standard deviations would be a 60% move in 12 months. And he calls that the warning track, right? So again, as we look out over the next year, if a continuation in the NASDAQ composite were to really ramp up from here.
Right.
You'd be something to stay alert to.
Yeah, but at this point, I mean, it doesn't look like crazy excessive by any
Except
means.
the great year that you've had on the NASDAQ.
Right.
That's what it kind of looks like.
So one thing that would be challenging is if the Fed were forced to either pause or even raise rates going into next year based on inflationary data. Certainly, we've talked about inflation so much, and it still doesn't appear dead. This is our friend Darius Dale with the blue line that's higher than consensus. And so does inflation stick at a higher number? I mean, that's the big question.
It's that
could derail stocks.
It could, absolutely. And the Fed reversing course after starting this cutting process would, I think, hit the brakes on the stocks.
Right.
Upward move, just because I think some of what is priced in is the anticipation of continued cuts, or even if it's slower than maybe anticipated. So,
right.
Yeah.
So this fifth thing to watch is the level of stock market concentration in the top 10 names, right? I mean, it's gotten bigger than it's ever been before, and that doesn't mean that those stocks can't do okay over time. It just, when that happens, you tend to find things be that there are other areas that could do a little better.
Mm-hmm. Yeah, I remember talking about this back in 2021, late 2021, and obviously 2022 is not a great year. Doesn't mean that it's going to happen again, or it won't persist in growing even bigger before something turns over. But it is, to your point, at a level that we have not ever seen before.
Right. And finally, our friends at Goldman Sachs Asset Management, they had to say in their outlook going into 2025, a well-rounded and differentiated approach to investing in the U.S. large and mid-cap space may lead to positive return outcomes in 2025. Translation, it sounds like, hey, maybe buying some of the other stocks makes some sense.
I think that's right. And they call out specifically mid-caps, so going down away maybe from the exclusively just mega caps, right?
Yeah. So interestingly, I mean, we've done a lot of research on looking back at persistence and trends and things that, add value. One of the things that we found is that, small companies can be a bit more volatile and a little bit inconclusive as to the level of outright value that they add to portfolios. But I mean, mid caps have actually added a fair amount of value over time. So I find it notable that they talk about the large space, but also the mid-sized space.
Mm-hmm. Absolutely, and mid caps, are the breeding ground for what become large caps. So participating in those as they grow into the big boys is not a bad place to be.
Yes, good stuff. All right, what are you watching these days?
We've started watching Ted Danson's new show on Netflix. I think it's called The Man on the Inside.
Okay.
It's fun. He's kind of a spy that's going into a retirement community. So
interesting.
But he's just charming. He's just really fun. So I grew up, watching Cheers on my parents' couch, and so I've always been a Ted Danson guy. It's been fun.
Absolutely. That's cool. Well, I'm watching Billy Bob Thornton at present, watching Landman on Paramount.
Which is the new Sheridan series, right?
It is, yeah. Okay. Taylor Sheridan series. Okay. It's super good.
Okay.
Super, super good. So anyway, more to come on that.
Awesome. Well, friends, thank you so much for watching. Happy December. We look forward to celebrating New Year with you. Keep an eye out for new videos coming each week, and we'll talk to you soon. Thanks.